Hello everyone and welcome to today's live stream. Guys, apologies, I had a little issue with the connection, but it's fixed now. I'm Ambrose and I couldn't be more excited to have you all join me for today's session. I promise you guys this is going to be a value packed session. Now, whether this is your first time tuning in or you're a regular participant, you join these live sessions. I'm super excited to share this space with you because we're going to be diving into the world of trading success. Today, we're going to cover some important and game-changing strategies, to elevate your trading career. We're going to look at, and this plan is going to work like a roadmap to help you identify these golden opportunities in the market. We're also going to be more practical, and I'll show you guys some very actionable insights. We're also going to cover some of the important tips and secrets of understanding risk management so that you guys can be able to trade like a pro with confidence. Now, while everybody is here, I'd like to know, you guys better and know the distance, who's the farthest person watching me today. So I'm going to ask you guys a few questions to kick things. And here's the best part of this session. This session is tailored for everyone. So like I said, whether you're a complete beginner or if this is your first time taking part in an Octa live session, whether you're a seasoned trader, that's looking for that extra edge, there's something that you're going to learn here today. We're going to talk about how you can balance your assets. There's something that you're going to learn here today. We're going to talk about how you can balance your assets and ensure that in the long term you're profitable. And we're going to do some analysis for major currencies as well, including the DXY. But let me know in the Okay, Promise Innocence is watching from Abuja. Ems is watching from Ibadan. Ronald is watching from South Africa, and he's an intermediate trader. And M says he's between intermediate and beginner. Well, the good thing about this session is, like I said, you get to learn, regardless of your trading, your level of trading experience, you get to learn something new. If you're a beginner trader and you're trying to, you're eager to learn the ropes, or if you're a seasoned trader that's looking for an extra edge, like I said, there's something here for you today. So I'm going to go over the disclaimer and we'll get right into the session. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general markets commentary and does not constitute investment advice. Guys, I'm having a bit of a network issue, but I get it fixed as soon as it comes up. So you guys don't have to worry. We're going to get the session up and running. I'm going to give you guys a quick introduction about myself. For those of you that do not know me, my name is Ambrose Ebuka. I have 5 years of trading experience and I've honed my trading proficiency, and I contrive various profitable strategies that include swing trading and scalp trading as well. Now, if you don't know what swing or scalp trading is, that's not a problem. I'll go ahead and explain it to you guys in this session. I mostly analyze gold, GBP JPY, and GBP USD charts with an outstanding accuracy exceeding 85%, and I regularly backtest these trading strategies for effectiveness. Universe from Edo State, Alani from Ibejuleki, Lagos. Okay, guys, welcome everybody to this session. Today we're going to look at this is the agenda and some of the important things that we'll be discussing today. Now, if you've been following the live trading sessions that I have on the Octa Broker YouTube channel, you would notice that I always like to go to the economic calendar first, right? And the reason for that is because I believe that the economy is a huge market driver. I mean, that's my way of trading. I always look at what's going on economically because it affects the domestic currency of that country, right? So we're going to check that, and then I'll introduce you guys, for those of you that do not know the Zabzone strategy, I'll introduce you guys to the strategy and we'll review the DXY. The DXY is the dollar index. I would explain what it means and how you can use that to trade other currencies in the course of this session. And I'll also explain the correlation, between the dollar index and other pairs. Now, before I continue for this session, I want you guys to tell me what currencies you trade in the chart. let me know in the chat, what currencies do you trade? We're going to be doing some analysis, so I need to know and, check those currencies as well and analyze the markets and that. So let me know in the chat what currencies you guys trade. Like I said, I mostly trade gold, GBP, USD, GBP, JPY, Euro USD as well. Most of the major currencies, or most of the currencies that are paired with the US dollar, I trade them. And that's because I look at the bias on the US dollar and I use that to look at other currencies that may be affected by that bias, and I trade in that direction. But again, guys, this session is going to be really amazing. If you don't even know anything about analysis, I'll be simple as possible. I explain everything in a simplified way for you to understand. All right. Universe says AUD. AUD is just a currency. AUD what? AUD USD, AUD JPY, AUD CAD. What do you trade? Gold. Gold. Okay, we'll definitely look at gold. Now, this session is going to last for about 45 minutes. And if you have any questions, you can use the YouTube live chat to ask your questions. And if you're watching this after the live, you can use the comment section to answer your questions. I'll periodically check it out and answer your questions. Okay, the ZAP zone strategy. What is it, and how does it work? What does it consist of? What kind of trader is it suitable for, and when do you use it? All right, let's check the comments if you have any other. Okay, so basically, it's just a zone trading strategy, right? Now, the reason I just call it zap is because we're zapping into the zones and trying to look for the best possible price to enter the market and potentially make some profits. Okay, now zone trading generally in Forex is a strategy where traders focus on specific price zones on the chart where they expect the price to either reverse or show a significant reaction. Remember, if you're going to be trading the zones like I do, you don't want to act on these zones before the market. You want the market to get to your zones, the market acts, and then you react. All right. Now, these zones are made up of a lot of things: support and resistance, supply and demand. I'll explain everything to you guys on the chart, but they are typically based on areas where market has bounced in the past, like support. If you know support, and if you don't know support, I'll go ahead and explain it for you. Support is a price level where the market tends to stop falling, right? So if the market is dropping and it stops at some point, it means that the market has created a support level at that point before reversing. Right? A resistance, which is also where the market tends to stop rising, can also be your zone. Now, we can use tools like Fibonacci retracements, trend lines, and some other technical indicators to help identify. All right, guys, please let me know in the chat if you guys can hear me. Please let me know in the chat if you guys can hear me now. Thank you guys so much for sticking around. I don't know, the network keeps breaking up, but I'm going to try every single time it breaks up to get back on the stream. Thank you guys for sticking around. Let me know in the chat if you guys can hear me. Okay. Great. So about the zone trading strategy, the idea is to trade within these predetermined zones instead of trying to predict where the price would go, outside of these zones, right? Essentially, you're looking for key levels, you're looking for points in the chart where you have a higher chance of showing price movement, understanding what the price is going to do rather than trying to guess what will happen outside of these key levels. Now, if you're a beginner trader and you have, usually beginner traders have a lot of strategies that they just learn here, learn, and then they pick one that, sometimes, I mean, most traders will go for the one that would give fast money, right? But if you're learning a lot of strategies and you're considering zone trading, you have to think of zone trading like looking for safe spots, in the market. Now, in Forex, these safe spots are price levels that have shown reactions in the past, areas of support, areas of resistance, where price has bounced up and down. Now, when you watch these levels or watch these spots, you get to understand this is where the market has bounced before, this is where the market could potentially bounce again, because history shows that price is more likely to reverse or change direction at key levels. Okay, so instead of trying to guess what the price will do in the middle of nowhere, you just have these key levels that you focus on, these important zones that you focus on to help you make informed trading decisions. All right, everyone can hear me now. Amazing, guys. If it goes off, I'm hoping it doesn't, I'm going to keep trying to get back on the stream because I have really amazing things I want to discuss with you guys today in this stream. All right, it's December. I need to talk to you guys about how to trade in December and also how to prepare yourself and manage your risk for trading in the new year. Okay, now what does the zap zone strategy consist of? First, guys, when you come into the market, what you want to focus on is first the economic calendar, and then you come to the charts, right? The reason I tell you guys to focus on the economic calendar is because things can happen economically that you may not be aware of. Hold on, is it still hanging? Okay, it's good. Calendar that you may not be aware of, and then what happens? You just come straight to the chart, you analyze trades, place trades, and a speaker comes up, says something about the market, and boom, the market knocks you out, probably hits your stop loss or something. So it's important that even if you don't want to use the economic calendar, you just check it to create that sense of awareness that, oh, by 6 p.m., this person is going to speak. By 1 p.m., NFP is going to be released, just so that you're informed and then you can adjust your trades towards that time. Now, the zap zone strategy is mainly technical. So first, you want to understand market structure, and you can understand the market structure by using the candlestick charts, understanding candlestick patterns, the trends, the ranges, the supply and demand levels. All these are the things that help you understand market structure. The understanding of market structure is basically you coming to the market and being able to identify if we're in an uptrend, a downtrend, or we are in a ranging market. All right. Then you want to identify key levels as well. These key levels are, like I told you guys, the areas of supply and demand, support and resistance. You can use your trend lines, your horizontal lines. For indicators, you can use the moving average to identify these levels. And you also, also included in the zap zone strategy is determining your entry and exit points. Now, this is also very important because a lot of traders just look at where they want to enter the market. They just look at, this is the candlestick confirmation I want to get. I've gotten it, so let me just dive right into the market. And whatever profit I get, then I close the trade, right? But that's a good way to go about it, or an ideal way to go about it, because what happens when the market goes against you? Now you're not prepared for a drawdown, so you just start to make rash decisions, right? So it's important that you also predetermine where you want to enter and where you want to exit. Now, where you want to exit should not only be in profit, but also if the market goes against you, so that as against you would help you eliminate risk, eliminate emotion, not eliminate risk, but eliminate emotion trading, eliminate the rash decisions that can come with unexpected market moves and all that. And finally, you want to apply risk management. Now you'll be wondering, most of the strategies that you see in the chart are just draw a line here, do this, high, low, other block, and this and that. But this is a more comprehensive, it's everything you need to prepare yourself for each trade. I mean, imagine you understand the market structure, right? Okay, we're in an uptrend, for example. You identify your key levels, we're bouncing off. Okay, we're in an uptrend, for example. You identify your key levels, we're bouncing off support. I'm looking to either buy if we bounce off or if we break below. Give me a second, guys. Okay. You're looking to either buy if we bounce up and sell if we break below. By predetermining your entry and exit, this is where I want to enter this trade, and this is where I want to exit in profit. This is where I want to put my risk in case the trade goes against me. You've already eliminated every emotion or every rash decision that would come with a spike or an unexpected move in the market. All right, so that's why it's important that you don't just go into the trade and identify zones and you trade, but you understand the structure, identify the key level. This is where I want to buy or sell. This is where I want to enter and exit, and this is where I want to buy or sell. This is where I want to enter and exit, and this is how much I want to risk on this trade. Now, if you go through all this, anything that has to do with emotion trading and all that. All right, so let me know in the chat if you guys understand. Let me know in the chat if you understand what the strategy consists of, and then I can go over to what kind of traders it's suitable for. Let me know in the chat if you understand. Okay, perfect. So what kind of traders is this suitable for? Now, remember in the beginning of this session or at the start of this session, I told you guys that if you don't know because I told you guys I'm a swing trader and also day trader as well, and also use some scalp strategies to get in and get out the market. I just look at market conditions and I follow suit, potentially making a profit. So regardless of whichever trading style that I use, I'm able to, diversify, or I'm able to adjust according to market conditions. I could go to the 5-minute time frame and I would see a potential or an opportunity to make a profit. I could go to the daily and the same thing. And that's the reason I can do that is because I understand the kind of trader that I am, and I'm able to scale this into other trading styles. So if you're a day trader, it doesn't mean you can't scalp. Actually, as a day trader, you can actually scalp. It's the swing trading part that you need to work on. But day traders are traders that look to close their trades within the day. And if you're looking to close your trades within the day, it means that you can also look for positions on the lower time frame. And who does that? The scalpers. Now, the scalpers are the kind of traders that get into the market and they want to get out in a minute. They don't want to waste time in the market. We have the swing traders that hold trades for days and weeks and sometimes even months. And we have the position traders that hold trades for weeks and months and even years sometimes. Now, from this explanation, I believe that you can identify, you're beginning to, align with any of these trading styles, and you can identify which particular trading style suits your trading activity. So let me know in the chat which trader you think you are. Are you a day trader, a swing trader, a scalper, or a position trader? Let me know in the chat. Now, the ZAP zone strategy is suitable for all types of traders because you can find a zone in every single. If you go to the 1-minute time frame, you would find an area of supply and demand. If you go to the daily time frame, the weekly, the monthly, the yearly time frame, you would still find an area of supply and demand. So regardless of your trading style, you're able to take advantage of the ZAP zone strategy and potentially make a profit. But let me know in the chat what kind of trader you are based on my explanation of the different types of traders we have. Now, when do you use the strategy? During volatile sessions, and what I mean by that is overlapping sessions. So we have sessions like the New York session and the London session overlapping. The London session starts 8 a.m., 9 a.m. Nigerian time, depending on daylight savings, DST. And the New York session starts 1 p.m., 2 p.m. based on DST as well. And sometimes, if the New York session starts by 1 p.m. and each session lasts for 9 hours, and the London session starts by 8 a.m., 9 a.m., you would see that around 1 p.m., 2, 3, 4, and even 5 p.m., both sessions will be open at the same time. And this can bring about volatility. This can be a good time for you to hop into the market and take advantage of volatility. Remember, as traders, volatility is what gives us money. We need the market to move for us to make a profit. If the market doesn't move, we cannot make a profit as traders. And the second time to use it is after major news events. Now, remember, I'm not saying during major news events. I'm saying after major news events. And the reason for that is because during major news events, you could see the market doesn't create a clear pattern. The market doesn't react to any key level, right? Most times during a high impact event, the market breaks through the key levels if there are any before maybe retracing or something. So you want to wait for the market to dance around, make all that spike, and then you can hop in when you see a clear reversal or a clear continuation. All right, I'm seeing M's in the chat. M says he's a day trader. Usually, when I ask these questions, I usually get, I'm a day trader response in the chat, and it's like everybody just wants to close their trade within the day, but that's okay. So we're gonna go straight into the live trading session right now. We're gonna do a quick look at the Octa economic calendar, an amazing economic calendar that you can take advantage of and potentially understand what's going on economically in different parts of the world. Remember, guys, you're trading currencies. Oh, this is an amazing design on the website. Remember, guys, you're trading currencies, right? And what this means is that the economic stability or instability of a country would have a direct impact on the domestic currency of that country. All right. So this is why I usually check the economic calendar and try to know what's going on economically in these countries. And then I go to the technical, I go to the charts and try to figure out what's going on and see if it aligns and trade accordingly. All right. The fundamentals will give you a long-term view of what's going to happen in the markets. Today, this is actually filtered to low impact events alone, high impacts rather alone. So we only have 2 high impact events here today. But if you're a beginner trader, obviously you want to focus on the medium and the low impact. If I put that and I click on apply filter, you'd see that the events are going to be increased and would have low, high, medium impact events over here. But I just like to I like to focus on the high impact events because as the name goes, it brings about high volatility to the market. All right. Osborne says, I'm a swing trader. I only scalp on gold. And I would understand why you scalp on gold. I think the reason is because of the fast-paced movement on gold. Gold gives you your financial results like ASAP, like as soon as possible. It gives you your financial results quickly. So gold just tells you, in the next 5 minutes, you're going to make a profit or you're not going to make a profit, right? So I think maybe that's why you're scalping on gold. But you can let me know in the chat if I'm wrong. Now, if you're new to the Octa economic calendar, you want to focus on, well, not focus, but you want to start by looking at these settings just to make sure that you're in the right time zone and the timing is correct. And you also want to add, medium and low impact events if you're a beginner trader. But today I'm just gonna explain these 2 events that we have here: the Australian trade balance month over month and the euro retail sales year over year, just so that you guys can understand exactly what it means and how it can impact the currency, right? To get a good definition of what this means, you can just click on this, and then Octa has already given you a definition of what it means, and you can also pay attention to this last sentence. If a steady demand in exchange for Australian exports is seen, it will turn into a positive growth in the trade balance, and that should be positive for the Australian dollar. All right, guys, if at any point in time you don't understand this explanation, please ask questions in the chat. If I don't get any questions, I usually assume that, the explanation was pretty easy or pretty simple and comprehensive and you guys understand. All right, so what is Australian trade balance? Now, think of it as a report card for Australia's trade with other countries, right? It shows the difference between 2 things. I want you guys to pay attention. 2 things. The exports, which are the goods and services that Australia sells to other countries like iron ore, coal, and wheat, and imports, which are the goods and services Australia buys from other countries like cars, electronics, and oil. So how is the trade balance calculated? Exports subtracted by imports, exports minus imports, right? So if the exports are higher than the imports, if Australia is exporting more than it's importing, then the trade balance is positive and it is usually called a surplus. But if the imports are higher than the exports, if they are bringing in more than they are exporting, If they are buying more than they're selling, then the trade balance is negative, which is also called a deficit. So let me know in the chat if you guys understand. Now, usually when you see economic reports like this, one of the questions you want to ask yourself is, what does it mean? Why is it important to me as a trader? And how does this affect my trading? All right. Now, you've understood what it means. Why is it important to you as a trader? The Australian trade balance gives you an understanding or a clue about how strong Australia's economy is. So if the exports are high, which is also going to be positive trade balance, if they're exporting more, if they are selling more, it means other countries are buying a lot of Australian goods. It means there is global demand for Australian products. It's strong, and this is going to help the economy grow. And global demand or a strong trade balance is good for Australian dollar because it attracts a lot of foreign buyers to use the Australian dollar. So when exports are high, it's positive for the Australian dollar. Now, when the imports are high, when they're buying more than they're selling, or when the imports are high, it's a negative trade balance, and it shows, or it makes you understand that Australians are buying more goods from abroad. Now what this means is there are a lot of people buying more from abroad, but it also means that Australia is spending more money outside of the country, and this is negative. It's called a deficit, and a negative or a weak trade balance can hurt or weaken the Australian dollars. Please let me know in the chat if you understand this explanation. Please let me know in the chat if you understand this explanation. So 3 things you want to do, or 3 steps you want to take when you're following up with an economic event. You see the report, you analyze it, or you think, and then you take action and you decide. You see it, you analyze, and you take action. Okay, so let's say, for example, imagine you're at a giant market, right? And Australia is one of the sellers. Now, the goods that Australia sells are things like wool, iron ore, coal, and the people that buy these goods are other countries. Now, imagine that Australia has an amazing month, selling more things than it bought. If you look at the economic calendar, you'd see that Australia made 5.9 billion Australian dollars more from selling than it spent on buying things from other countries. Now, this is a trade surplus, and I would call it kind of like a winning bonus at this market, because it means that Australia is making more money from selling than it is spending, and it makes the Australian economy look pretty strong. Okay, now if you look at the forecast, it was forecasted that this report will come out at 4.5 billion Australian dollars, a bit lower than the previous. The previous was at 4.6 billion Australian dollars. Right, you can see that. So this is expected to be good for the Australian dollars, but like I always say, you don't trade economic indicators in isolation. You want to go to your charts and you want to basically look at areas where this market is reacting and areas where you can hop in for a day buy or a sell. You also want to look at the correlation between this report and that of the currency that you're trading against. All right, so basically this Australian dollar report, or this trade balance report, is kind of good news for the Australian dollar, because a stronger trade surplus, like I said, a positive trade balance, means Australia is in demand, right? So the better the performance, the more confidence traders have in Australia's economy. And what does that happen? What does it lead to? It leads to people investing and buying the Australian dollar as well, and it makes the Australian dollar stronger. So let me know in the chat if you guys understand. And we have the retail sales in the Eurozone year over year as well. This is for the month of October. As you can see, if you look closely, you'd see the indication October here as well. There is also an important news that I think we are missing out on. I think is the US initial job claims. We're going to come back to the US initial job claims, but I'm just going to do a quick explanation for the Eurozone. Okay, So the retail sales, like I said, you can always click and understand the definition. The retail sales, the report tells you how much people in the Eurozone are spending in shops compared to the same month last year. So we're looking at how many people in the Eurozone are spending in shops compared to the same month, October last year, right? This includes things like groceries, clothes, electronics, and other everyday items that people buy. And YOY means year over year, which means it's comparing the sales in 1 month this year to the same month last year. So it's comparing the sales in October to that of last year. So, for example, if the report says 1.9%, it means people are spending 1.9% more than they did a year ago. All right. Now, remember, I told you when you look at the economic event, you get the definition and you ask yourself, why does this matter? How does it affect, my trading? Now, why does the retail sales matter to you as a trader? First, it's important because it shows you how confident people are about the economy. When people spend more, it means they feel good about their more spending also helps the economy grow, and this is good for the euro because a strong economy would attract investors. But if people spend less, then it could mean that they're worried about their finances or the economy, and less spending usually slows because it makes investors less confident. All right, let me know in the chat if you guys understand, please. Let me know in the chat if you guys understand. So the third question, how does this affect your trading, right? You get the definition, why does it matter, and how does it affect my trading? Now, traders or investors use the retail sales data to predict how the euro might move. If you look down here, you'd see a high reading. A high reading is seen. A high reading is seen as bullish for the euro, while a low reading is seen as bearish. Now, a high retail sales growth means is bullish, and it means that the euro is positive. If the report shows that there's a big increase in sales compared to last year, it's a sign of economic strength, and this is what makes the euro go up in value. For example, pairs like euro USD might increase, euro CAD might increase as well. But if we have a low or negative retail sales growth, I'm checking the chat if you have any questions. If we have a low or negative retail sales growth, if the report shows that there's a drop or a small increase in retail sales, just like we had today, we had a drop. The previous was at 2.9, and now we're having a 1.9% release, which is lesser than the previous. It's a sign of economic go down in value. The euro USD and the euro CAD pairs might go down in value as well. Let me know in the chat if you guys understand the explanation on the retail sales. I'll quickly go over US jobs initial claims and give that a minute to load up. Okay. Just click on the report so that you can understand what it means. You can understand how to trade based on these reports, and also looking at the domestic currency as well. Now, imagine a situation where people in the United States lose their jobs, and then they can apply for financial help from the government for the first time. The initial job claims applied for this help. It's unemployment benefits in a week. Now, like I said, you get the definition, you identify why it matters, and how it affects your trading. The initial jobless claims, the report tells us how strong or weak the US economy is. Now, I'll tell you how it works. If many people apply for unemployment benefits, which is the high jobless claims, it means more people are losing their jobs. This is bad for the US economy because fewer jobs mean less money being spent. And when the economy looks weak, the value of the US dollar usually goes down, right? If fewer people apply for unemployment benefits, which is going to be low jobless claims, it means fewer people are losing their jobs. And this is good for the economy because it shows businesses are doing well and people are working. And when the economy looks strong, the value of the US dollar usually goes up. Ems is asking what's the meaning of MOM. MOM means month over month. Now, we've identified the definition. We've looked at why it matters in Forex. Now let's look at how it helps you in trading or how it affects your trading. Now, generally in Forex trading, currencies are affected by the strength or weakness of a country's economy, right? For example, if the US dollar gets stronger, it can make currency pairs like Euro USD go down because, the US dollar becomes more valuable than the Euro. If the US dollar gets weaker, it can make currencies like Euro USD go up, because now the USD is weak, Euro is stronger, obviously that's going to go up. So by looking at the initial jobless claims report, you can predict how the US dollar might move and use that information to make trading decisions. Remember, you see the report, you analyze, you see the report, and it says more people, like here, if you look here, you'd see the last message, and it says a larger than expected. Guys, you always want to look at this last sentence to understand the influence of this report. A large than expected number indicates weakness in the US labor market and reflects negatively on the US economy. It means many people applied for jobless claims, right? Now we need less people to apply for jobless claims before it's good for the dollar. Now we're seeing previous 213, actual, which was today 224. Now you'd see that the report says more people than expected lost their jobs. And you analyze, this is not good for the US economy. This is bad, so the US dollar might weaken. And then you go to the chart and analyze and look for a currency that you can, you buy the dollar against that currency, like maybe Euro USD. We're going to check the charts and see all that. But whatever currency that you're buying, if you're reacting to the US dollar, you have to also check that currency and see how they are faring, how the economy is faring, and how it's going on, or what's going on in the charts. Okay, so I think I've explained the important events that we had for today. I'm going to go over to the chart right now. We're going to do a quick analysis. Let's check the comments and see the currency pairs that we have. Okay, AUD USD, Euro USD. So guys, I like to start with the dollar because, if you're trading Euro USD, GBP USD, your understanding of the dollar alone can help you identify areas on your charts where you can buy or sell. Let's give this a minute to load up. And, if you've been following the live trading sessions, you'd remember that we've been following the dollar index for a very long time now. We've followed the dollar index from the start of this year, and we're still following every movement. And one thing that you guys would notice is the dollar index has always reacted to these levels that I've indicated, these key levels and these significant zones, either on its way down or on its way back up. If you this level, we can trace it all the way back to this point. I can even go further to this level as well. This significant level, we can also trace it all the way down. We're seeing that the market is actually reacting to this key level. And what do you want to do as traders when the market is at the key level? You observe, you look at how the market acts on that key level, and you trade accordingly. All right. Now, this is the dollar index. You don't trade the dollar index. You look at what the dollar index does. Is it strong? Is it weak? And then you use that understanding to trade other currencies, the major currencies. Now, if you don't know what the dollar index is, the dollar index, or the US dollar index, DXY, it measures the value of the US dollar against a basket of 6 major foreign currencies, which are the Japanese yen, the British pound, the euro, the Swedish krona, the Swiss franc, and the Canadian dollar. Okay, so if you trade these currencies, you can also use your understanding of the dollar index to either buy or sell across these currencies that I just mentioned. Now, if you look at what's going on with the dollar index, we're looking at recent price action now. You see that the dollar index created a recent high here, and after this high was created, the market pushed back all the way down to create a low, and obviously we're failing to come back up here to retest or even potentially break these highs. We're currently settling at this key level. Now, what happens if we break below this key level? It gives you the understanding that the dollar is getting weak. This is one of the major levels for that indication. My second major level would be a break below this 200 period moving average, which would probably align somewhere around this zone. probably around aligned somewhere around this zone. That will be my second and final confirmation about confirmation on the weakness of the dollar. But right now the dollar is showing weak signs. We are sitting at a key level, so a bit too early to decide unless we break that level and come down to make potential retest. Then GBP USD would be buys, Euro USD would be buys as well, because now the dollar is getting weaker. And if you look at, let me zoom in a little bit, show you guys. And this is on the daily time frame, guys. If you look at the pound dollar, you'd see that when the dollar, which is the DXY, is getting weak, what happens to the pound dollar? It gets strong, right? Oh, this was an analysis we did on the pound dollar. But what I want you guys to notice is, remember, the dollar index was trending upwards, got to an area of resistance, and what happened? Started reacting after creating all these higher highs and higher lows. It failed to create another one here. This was a major resistance that we were able to trace all the way back to, last year, right? 2023 at that, 2 years ago. And guys, let me give you guys a quick and important tip. If you can trace support and resistance levels to the higher time frames, the monthly or the yearly time frames, those levels are mostly respected. They are stronger than the lower time frame levels. The support and resistance on the 15 minutes time frame is not as strong as that of the monthly or the yearly time frame. So what's going on with the dollar right now is we are reacting and pushing back down, but this pushback down is not very strong, except we break below this key level where the market is dancing. I'm not seeing emergence of engulfing candlesticks or momentum candlesticks like this one. I'm seeing the market begin to slow down here, probably create some consolidation or indecision candlesticks here and bounce back up. But for us to be prepared for a bearish dollar, we have to break below the 106 psych level. And what happens if we successfully break that? Then GBP USD also would be buys. Obviously, we're coming up here to retest this key level, and also the 200 period moving average. This is a good confluence right here. And I'm saying that because if we break this key level and the 200 period moving average and also this level right here, then we're coming for a retest at this zone right up here. If we break that, we're coming up to this point. All right, so that's for GBP USD. Now, the reason I'm confident with these key levels is because, guys, if you look at this chart, we've been following the dollar index, we've been following GBP USD as well, and the market just respects these levels. The market tends to move like a magnet. These are everything that goes on in the charts are human reactions, and humans, we like to repeat ourselves. So let me know in the chat if you understand the analysis, and if you have questions, this is your time to ask questions. The same thing for Euro USD as well. We're going to see if the dollar index can push lower. If that happens, Euro dollar is going to break through this point and here as well and come for a retest at the 200 period moving average, which is kind of what I'm expecting. Where is that? A retest at the 200 period moving average is what I'm expecting on the euro dollar. But for that to happen, we have to break through this key level first, and this one as well. Probably a break and a consolidation, or a break and a pullback, something like this. And then we get down here and then boom. But I'll tell you guys to keep an eye on the dollar. The dollar index, is trying to break below this cycle level. If it does that, we're coming all the way down to this point. So if you have any questions, this is the Q&A session. You can go ahead and ask me your questions. And you can also probably take a screenshot of these risk management tips. These are important tips, that you can use and that can help you stay confident in the market. The key word here is confident, because you want to be that confident trader. You want to be a confident trader. You don't want to be the trader that comes into the market and you're shaking like, the market is going down, the market is going down, and you're shaking. No, that's not the kind of trader you want to be. So take note of this 11 important tips. They would help you stay confident. These are 11 important risk management tips that will help you stay confident in the market. Trying to see if you guys have any questions. I'm not seeing any question. Guys, very important. If you've been thinking about taking your trading journey further, I'll tell you guys to try out the Octa trading app. Octa Trader, right? It's a great platform where you can practice all the strategies that we've talked about today and we've analyzed today. You can register with the link in the description or the link in the chat, and you can start implementing these strategies right away. The Octa Trading app offers a wide range of instruments with low spreads, fast execution, and zero commissions. We also have various educational resources like this one you're on right now, and a lot of other ones on the Octa Broker YouTube channel and on the app as well. We have 24/7 customer support and a strong commitment to funds and data security. If you've stayed to the end of this session, oh, I just saw a couple of people join. If you've stayed to the end of this session, congratulations, you get to use the promo code Ambrose E100 for a 100% bonus on your deposit. You open the Octa Trading app or visit the official website, octaafrica.net. You go to your profile and find the promo code section in the menu. Enter the promo code Ambrose E100 and press activate. Make a deposit and enjoy your bonus. All right. Today we discussed the sub zone strategy. We reviewed the strategy on the live chart, and we also talked about some of the important tips that can help you stay in the trading business long enough to be profitable and consistent enough to make more profit. These are some key takeaways I want you guys to keep in mind. Analyze the markets to understand how they behave under various market conditions. Review your actions and reflect on your decisions to identify what worked well and what can be improved on. You cannot know what to do, what to improve on. You can't know what to fix, and you can't, avoid your mistakes if you don't do a reflection, right? Keep up with latest market news and updates. You can use the Octa Trading app for that, and also the economic calendar. And always come here on the Octa Broker YouTube channel to watch these educational resources that we have so that you can enhance your understanding of trading strategies and tools that you use in the Forex market. Let's see if you have any questions. This one is an interesting one. Can humans trade successfully against bots in the world? Well, humans are the ones that created the bots, and algo trading works in a very interesting way. It's like the bot has been programmed to see a certain thing in the market before it reacts. Okay, so humans, we created these bots ourselves, we programmed these bots ourselves. So they just do basically what they've been programmed to do. There are some bots that are just relative strength index bots. I mean, they only buy when the market is at 8 oversold, oversold level, or 98 overbought level. So if it doesn't get to that, they don't act. Some are just breakout and retest bots. There's a set of bots. Let's see if you have any other questions. All right, guys. In the absence of any other questions, I'll go ahead and end the stream. If you're just watching this outside the live, you can ask your questions in the comments and I'll answer your questions. Thank you guys for joining the stream today. Keep learning, keep growing, and remember, the market rewards the patient and the disciplined traders. See you next time. Happy trading.